Let's try and make some sense of all this. Sally Mitchell joins us now from The Mortgage Mum. Sally, thanks for being here. Firstly, can you explain what's actually happened in the last 24 hours with both inflation and interest rates, and tell us how they're linked?
Yes, of course. Well, they are very heavily interlinked, the two indices. We have, as a country, the government has a inflation target of 2%. That is what they always aim for. And at the moment, it's 6.7. Now, we did have a much higher rate not that long ago of 11.3. So we are coming down. But the way that they affect inflation, also known as the cost of living, is by manipulating the Bank of England base rate. So that's why we've seen 14 consecutive increases in the base rate. And the correlation is that the inflation rate has actually reduced, which is brilliant. We're still quite a long way off the 2% target. If they go too far with the base rate manipulation to affect inflation, we run the risk of going into recession. So it's a really, really finely balanced thing, which is why, with the surprise reduction in the inflation rate yesterday, the Monetary Policy Committee have decided to leave the base rate alone. By a very narrow margin, I must say, 5 votes to 4, and hope that when we next look at it, which will be next month, that inflation perhaps has come down even further, and we may have another stay of execution, or we may have to, increase. I mean, the grail would be to see base rates actually reduce, but we'll have to wait and see for that. So it's quite a fine balance.
And as you say, the internal vote by the Bank of England to keep interest rates the same was pretty tight. Do you think that shows there's disagreement on whether this was the right move or not?
I think there's always disagreement. If you look at the voting history of every committee meeting, it's normally quite nuanced, quite tight. It has been quite tight recently. And the word on the street was that it was going to be very much an increase today because they expected inflation to be higher. And even that tiniest margin of 0.1% obviously swayed some minds on that committee to say, no, let's be cautious. Let's see what happens. We can afford to just coast for another few weeks, give everybody a bit of a breather and see what the effect is. But there are really conflicting theories on how long you should wait to see the effect of rate changes. And some people believe that, a month or 6 weeks is not long enough. It takes longer for that to trickle down into the economy.
Who will benefit from today's news, Sally?
Well, anybody who's on a tracker mortgage that tracks the base rate will find that for the first time in a very long time, their monthly payment will not increase this month. So that's good news. Anybody who is on a standard variable rate mortgage should see the standard variable rate stay the same for a little bit longer, which is good news. Now, that's only 20% of the mortgage holders in this country. The vast majority of people are on fixed rate mortgages. And although this staying the same, this equalising, this retention of that base rate percentage will not make things better, it does actually give the market real confidence that things are going to improve. And we've already seen lenders reduce some of their fixed rate products off the back of the announcement today. One big lender has announced a reduction in fixed rate products of up to 0.3%. And that will comfortably take people into the below the 5% rate that we have been having to talk about for the last few months. So it's good for the future for fixed rates, gives us a glimmer of hope, and it's instantly better for anybody who's on a tracker mortgage.
And just briefly, for the bank to make this decision, not changing the rate, does that mean they're really just stalling before deciding whether it goes up or down next time?
I think it's highly likely that we will see an increase as we move toward the end of this year. I don't think unless something magnificent happens with inflation, that we are sort of pausing and then heading downward. I don't think that's necessarily the case. But I will take it as a positive that things don't always have to escalate and increase, and it does show longer term confidence in the overall market, which is a good thing for everybody.
Absolutely. We need all the positivity we can get. Thanks for being with us, Sally.
Pleasure.
Sally Mitchell there from The Mortgage Mum. This is BBC Radio Kent. Plenty still to come.